Morning, Steve here in Chicago with the morning grain comments. Well, it's Friday. The sun is shining here in Chicago, but we're expecting rain overnight, and there's chances of rain all weekend. There's another rain event on Wednesday. The extended models call for drier and warmer weather, especially west of the Mississippi. But the heavy rains between now and then will be focused in Kansas, Oklahoma, Missouri, most of Illinois, Indiana, and Ohio, and the Ohio River Valley. Those are all areas that are already saturated and areas in which most of the acres that need to be planted in corn is still not yet planted, and so there probably some delays there. The corn market has rallied now with July corn sitting at about the 450 area. That's a big rally from the contract lows that we established in mid-May. Market started rallying because of the wet weather delaying plantings. And then the USDA this week lowered the acres and yield without official NASS data based on their models that suggest crops planted this late is not going to yield as well as trend, or we're going to be losing acres. There was also a private group that came out yesterday and said the acres will actually be out 8 million versus the 3 million that the USDA said this year. So now we're getting up into some areas in which we need further supply problems in order to justify a higher trade. So it's kind of difficult to be selling corn if you're a farmer out of your inventory or out of the field, given the lateness, but you could look at 2020 and begin to think about selling some corn out there at that price level. As far as the beans are concerned, kind of a follower. I think the trade is a little bit concerned that maybe we'll lose some acres, but specifically yield from the USDA's current numbers because of the late plantings. We also note that we're still no China deal, and the Brazilian and Argentina crops from this year are large. So most of the news in soybeans is negative, except now we're approaching in the nearby market the $9 price level. And here again, for 2020, you should probably sell some beans thinking that 2020 weather will be better than 19 weather. Still no word on whether or not we're going to have a deal with China, and that's a big unknown because the president seems like he wants a deal. It's just does China want one? Wheat market's also following up, partly because of concern that these rains are causing quality problems in the winter wheat crop, but also some dryness in Canada and Russia. So again, right now the managed funds are still short beans. They're short soybean oil. They've covered their short in Chicago wheat, but still short KC wheat, and they continue to add to their long position in corn. So the question mark is, will they begin to get out of their short positions and add to their long positions, especially in corn? Outside markets still dealing with issues in the Persian Gulf and concern that the Fed is going to be lowering rates soon, which adds to money flow into the equity market and out of the commodity market. So in general, the grains are a weather market. They can be very fickle. They can stop on a dime if the weather improves, or they can go up every Monday if there's concern about the supply. As always, these are my thoughts and not those of ADM or ADM Investor Services. Have a safe and profitable trading day.